Hello and welcome to my series Student Fund Manager, where I manage a fund as a first year MBA finance student. This is the 16th episode in our series, and I wanted to remind myself as well as everyone here where we are really going with this series. My aim here is to gain practical experience in portfolio management skills by actually managing a portfolio and also share the experience and useful tools with you. If you are new to finance, then there are going to be some terms and concepts in our channel that will be initially difficult to grasp. But in my experience, that's the fastest way to learn and get involved. Introduction and everything just takes a lot of time, and there are many people, many wonderful individuals who are creating beginner friendly content for people. So you can go and watch that if you are new to finance and you absolutely cannot understand anything from these videos. My experience with modern portfolio theory and some statistical tools such as standard deviation and regression showed me the possibility of using those tools, and as a result, I am more inclined to specialize in research analysis and portfolio management. My aim here is to ultimately venture into venture capital, and before that, I need to be well reversed with how portfolio management works. In my previous video, I had done a self-evaluation and I did not perform well at all. And this video is about the action plan to improve my portfolio management performance. So fund management here simply is my ability to generate better returns than the benchmark index. In our case, it is Nifty 50. And as I had discussed in my previous video, these four skills are: number one, identifying investment opportunities. This basically is looking outside your portfolio for newer stocks with the ability to generate better returns. Next, we have stock research. This is basically the research of stocks which we currently hold as well as the ones we are considering to purchase or sell. Basically, anything related to decision making of the stocks, we are going to research these areas and we are going to thoroughly research our decisions before we make them. Number three is monitoring and analyzing fund performance. So this is the ability to comprehend what these returns actually mean, and it is much more than just profit and loss. We have to analyze what we did right, what we did wrong, and ways to improve the quality of our decisions. And number four is performance against benchmark. Now, obviously, we'll have to generate better returns than the benchmark, or it would be wiser to keep our money in an index fund. Even during market downturns, it is possible to be profitable in the market. Coming to identifying investment opportunities, I will have to be on the lookout for new as well as existing businesses and how they work. Since I am investing mostly in large cap companies for the time, three stocks have piqued my interest from large cap. The stocks are: number one, Reliance Industries, because of their buyouts and high leverage as well as their risk taking attitude. In number two comes Tata Consultancy Services, because it is a trusted brand name. They are a Fortune 500 company and third largest India based IT company. And they also bring in foreign income, so the profits will soar with the exchange rates. And TCS also operates globally with employed workforce from many countries, so it is diversified in its own way and also diversified in terms of skill sets and flexibility. And I have also decided to invest in ITC. This is because it is a conglomerate which dominates the tobacco industry in India. And apart from this, it also has luxury hotels, FMCG brands, and much more like that. And because of dostarlimab, Google it, I am also very bullish on this stock, and I am looking to invest somewhere around 1500 rupees in this stock. And apart from this, I am also looking to invest in automobile company stocks. I will try to acquire stocks of those companies which have subsidiaries with good sales records so as to diversify returns within the company and management. Next up, we have stock research. I wanted to be aggressive in my approach to acquire good performing stocks to include in my portfolio. I have analyze the returns and risk of these three stocks as well as their betas for the last 1 year. So from 7th June 2021 to 6th June 2022, Nifty 50 had an average daily return of 0.03% with a standard deviation of 1.04%. During the same period, TCS experienced an average daily return of 0.04% with 1.38% standard deviation. And during this time, it had a beta of 0.79, meaning it is not highly tied to market returns, which is amazing because the returns and prospects of the company is great. During this 1 year period, it also provided a holding period return of 9.15%. Next up is Reliance Industries. During this period, Reliance Industries experienced an average daily return of 0.1% with a standard deviation of 1.68% daily. And during this time, it had a beta of 1.13. So this means that this stock is highly influenced by market returns. Since Reliance Industries has performed fundamentally well, I will purchase this stock. And during this time, they also have provided a wonderful holding period return of 38.1%. Next up is ITC. ITC has also fared well during this period, providing a holding period return of 39.87%, even during a not so good market performance. And the real cherry on top is this stock has a low beta of 0.75. It is a defensive stock with great returns. One important thing to note here is this is a bare minimum research that I have done to gain few basic insights on how these stocks perform, how they go along with the market, as well as return expectations. So coming to monitoring fund performance, it is critical to develop a feedback loop through which I can track my progress. I will be delivering performance reports at least twice a month, and currently I am working on fixing a standardized format for the evaluation of the fund performance. Right now I am considering 6 parameters, and these are comparison against benchmark. This will help me understand whether the portfolio is worth investing over a passively managed fund, as I had previously mentioned. Number two is holding period returns. It provides the total returns provided by the portfolio holdings, including individual stock splits and dividends. And number three comes average daily return. This does not need any explaining. In number four comes volatility. This is basically the measure of value at risk for the portfolio at a given point in time. This can be calculated using standard deviation or variance. Number five is beta. Beta is another important metric as it measures how your returns are related with the market performance. And in number six comes expected returns against actual returns. So it is critical for us to evaluate whether a stock is actually living up to what we have expected it to. And if it does not do that, then unless there is a very strong reason otherwise, we're going to dispose of these stocks. Now we come to the fourth part of the improvement plan, that is performance against benchmark. As we maintain profitability and perform well in these above areas, we will be able to maintain profitability better and eventually generate better returns than the benchmark index. In the future, I will be interested in buying put options to proportionately hedge my positions in times of market downturns and uncertainty. So this is an overall metric, and given everything else is in order, we can expect to perform better than the benchmark. Now coming to the actions that we have executed, we have purchased one TCS stock for 3,401 rupee and 5 paise. We have purchased one Reliance Industries share for 2,769 rupees and 90 paise. And we have purchased one ITC stock for 273 rupees 20 paise. We are looking to increase our holdings in ITC. The next video, as I had discussed earlier, is going to be on understanding metal industry in India, mainly iron and steel. and this will be followed by NISM 15 Research Analyst, where I will be discussing more in details about when I am looking to take the examination and how I am preparing myself. Once these two are over, I am looking to make a video to cover either automobiles industry or show you portfolio optimization in Excel using modern portfolio theory. And our investment fund currently is valued at 13,264 rupees 40 paise with a total return of negative 335 rupees 60 paise or a total negative 4.82% ROI. So once again, it was great having you here with me. Thank you for watching, and I will see you next time. See ya.